Well, folks, what an incredible move. Public count today up over $74,000. If you add up what I was up in my other portfolios as well, it was a very nice day in the market. Absolutely incredible to see the move since last Monday, the crash, the panic, when people couldn't wait to run out of stocks. It was incredible, right? Just since that time, Shopify is now up 45%. Keep in mind, people try to get 45% over a 5-year span in the S&P 500. Palantir is up 37%, Honest is up 35%, Nvidia is up 24%, Meta is up about 15%, SoFi is up 9%, S&P 500 is up 7%. That's just since the panic last Monday. Absolutely incredible. To start this video, I want to say cheers and congrats to everybody who wasn't panic selling out their stocks. I usually say hit a thumbs up for me. Hit a thumbs up for yourself today, folks. Hit a thumbs up if you were somebody that wasn't panicking last Monday, if you played it cool, if you took advantage of great companies that were trading at insane discounts back on last Monday. Give yourself a thumbs up because you deserve it. Because I can tell you, there's a lot of people that were panicking. Japanese carry trade, oh my gosh, right? Freaking out left and right. Couple core subjects I want to speak about here today. We're going to talk about what the heck's going on with this market because it's incredible, right? I mean, those moves are ridiculous. What's going on here? Where are we headed from here? Second thing we're going to talk about is a lot of stocks in this video. We're going to talk about many various stocks, kind of what's going on there, opportunities, those sorts of things. I appreciate everybody joining me as always. Thanks for being subscribed. If you're looking to apply to join my private wealth group, my private stock group, get access to 1000xstocks.com. I'll put that as a pinned comment down there today. You can fill out an application. We can see if we can get you in there maybe next week, okay? All right, guys, appreciate you being here as always. Where I want to start today, before we get into the markets and stocks, it would be weird if I didn't talk about this because I haven't actually talked about it. The moves came out that Warren Buffett did, right? It came out yesterday, all the detail around the moves he made. There was only two significant moves, in my personal opinion, that are worth talking about, okay? One is Apple. The other is Ulta Beauty. These are the only two, in my personal opinion, worth talking about. What's my opinion in regards to Apple sell? What's the reality? Like, why did he actually sell Apple stock? My personal opinion is there's two core reasons why he sold Apple stock, okay? Let's actually say there's three reasons why he sold Apple stock. And the third one's the biggest, in my opinion. So reason number one is the valuation's gotten pretty high for Apple. If you remember when Warren Buffett started buying Apple stock many years ago, back then, I remember forward P's, trailing 12-month P's being kind of in the 12 to 15 range for this stock. And now we're about double up that. So now that Apple has this forward P of 30 plus on it, right now it's about 32, 33, right? You're in a situation where the expectations for the company are a lot higher. When you traded a 12 forward P, the expectations are pretty darn low. When you traded a 32 or a 33 forward P, now your expectations are like way up there, right? So Apple has to come in with great numbers basically year in and year out moving forward to continue to justify this valuation. So the expectation's higher, right? That leads us into point number two, I believe he sold, is the revenue's been very troublesome lately. I don't think he likes how volatile the revenue's really been. I mean, this company, if you go back a few years ago, very strong revenue growth. And here recently, I mean, we've had quarters recently where Apple's revenues are negative. That's not good, right? Like that's for Warren Buffett, he likes consistent revenue growers that doesn't matter the dynamic that's going on out there, they're going to grow, they're going to grow, they're going to grow. Apple's lost that now at this point in time, right? The third reason I believe he sold is much more significant. So guess what happened back in March? Back in March, the Justice Department sued Apple for monopolizing smartphone markets. Now, if you want to read it, the details around that, it's very significant. So the new quarter starts after March, right? April, May, June. And that's when Warren Buffett sold heavily. My opinion is between the valuation of Apple, the troublesome growth numbers recently, and then he's very well versed on these sorts of situations. He might have a feeling that the Justice Department actually has a strong case against Apple and they might actually be able to change a lot of things in regards to Apple's business model, which could very negatively affect Apple's net income and Apple's revenue. Which when you're trading at let's say a forward PE of 33, right? And all of a sudden you get hit with the Justice Department. If his opinion is that they've got an actual good case here, we could be talking about a stock that you could sell down significantly, and that sell down could happen over a period of several years, right? And then it takes several years to get back to where it used to be. So let's say Apple's at, a 3 point something trillion dollar market cap right now, right? 3.4. If the Justice Department has something here, who's to say it couldn't sell down to a 2.4 trillion or $2 trillion market cap over a 1 to 2 year span, right? Then Apple needs to crawl back, so you could be with dead money in the stock for 5 years or so, right? That's something to take into account, and I believe that's one of the reasons he ended up selling a ridiculous amount. It wasn't like it was a little sell. And I told you guys, I think he's going to, part with a lot of shares, and sure enough, he ended up doing that, right? Now, Ulta Beauty, why did he buy this stock? Now, first off, there's a lot of people assuming that it wasn't him buying the stock. It might have been Todd or Ted. Possibility. Here's why I believe it could have been Warren Buffett to actually buy Ulta stock. The business model. This is a perfect business model that Warren Buffett can wrap his head around. Selling makeup, cosmetics. They obviously have their online presence. They have their retail presence. They have great relationships with all the cosmetics companies you would want to have relationships with, right? They're a great run retailer over the last 10, 20 years. And so it's not like it's a complicated business model for him to understand, right? Additionally, the valuation is very attractive. And additionally, the company is expected to have solid, good revenue growth and earnings per share growth in the future. And so for all those reasons, it's actually kind of a perfect Warren Buffett stock. It's a perfect Warren Buffett stock. So I'm not surprised to see him buy Ulta. Now, in regards to the market is very bipolar. And you got to keep something in mind. The market can be extra bipolar when there's earnings going on. So we're in earnings season right now. Opinions can change quickly depending upon who's reporting an earnings report, right? If suddenly Walmart reports strong earnings, and for the first time in 11 quarters, Walmart comes out and says, we're growing our business outside of the grocery in base necessities area, and general merchandise is finally growing, like they just said, right? Oh my gosh, like that's huge. That means we could be actually coming out of this consumer goods recession that we've been in for the last 2+ years, right? That's seen as a positive signal. It's seen as a positive sign. And all of a sudden, if you get a weak earnings report, some company says this is troublesome, that's troublesome. If NVIDIA came out in a couple weeks and reported bad earnings or bad guidance, believe me, all of a sudden huge poor sentiment all in the whole stock market. It'd be Red Dead Redemption out there, right? If NVIDIA comes in, does another double beat, then does a triple beat, they beat on their guidance as well. Boom, up and away we go. NVIDIA, next thing you know, stock will be 150 plus. Next thing you know, all big tech will just run. We'll see Meta approach a 700 number, right? And so market's very bipolar, especially in earnings season. All of a sudden, 1 minute feels great, next minute feels horrible, and it really depends upon who's reporting earnings and what are their numbers at that particular time. Another thing you've got to take into account that's going on in the stock market is there's estimates about 70%. So the majority of trades that are going through on a given day are done by AI algorithms. And so these AI algorithms are reading different reports, they're reading different things, deciphering the information. That's how you can see stocks go up a ton or down a ton within 30 seconds of them reporting numbers. How is that even that possible, right? Humans can't do that. I can't read through a whole earnings report and say, I need to sell the stock, buy the stock in less than 30 seconds. No. But you know what can? A machine can. And so it's looking for keywords, it's looking for key numbers. Boom, boom, boom. This beats, this beats, boom. Send the stock up. Right? Oh, this isn't said. Oh, this is a bad word choice here. Boom, send the stock down. So in the stock market now at this point in time, so much is driven by AI. And it creates a less intelligent market. I know it's supposed to be creating a more intelligent market, AI, but I would say it's actually creating a less intelligent market because it's making justifications without all the full details. Even if you have an earnings report, right? How much weight do you put on this thing versus this other thing? You have to be a human to really decipher everything at play here. Like an AI system can't do that properly. It just can't. It'd be awesome if it could, but it can't decipher everything, right? And how's it going to make the justifications before you even get to the conference call, right? And so the AI systems are flawed, but they create a more bipolar market. It creates, guess what, more opportunities for us humans. I love the AI. I love the AI. If it wasn't for the AI, I'm telling you, we wouldn't get these crazy sell-offs. You wouldn't get all of a sudden stocks crash and Shopify to go up 45% in 9 trading days. That would never happen. But because of AI, these ridiculous moves can happen out of nowhere, and all of a sudden you're able to scoop up shares and you're able to get, in a matter of days, the returns that people would hope to get over years. And you get it in days. It's incredible, right? Next thing, humans can be erratic. Now, listen, there's a lot of people in the stock market with a lot of money. And sometimes these individuals, these fund managers, these folks that run ETFs and whatnot, right? They can be very erratic. Their opinions change like in a second, right? Even Jeremy Siegel, the professor. I was watching him recently. He's not really a money runner. He's more of an economist, right? But I was watching him, go back to watch him on Monday of last week. He's calling for the Fed to do emergency 75 basis point cut. He wants them to do another 75 basis point cut right after that. I mean, guy was freaking out. All of a sudden, so erratic, right? It was like the end of the world. And he'd been interviewed not even that far before that, and he wasn't saying anything about that. Then all of a sudden, he gets interviewed yesterday, and he walks it all back. That's erratic, ridiculous behavior. And that's from an economist, a very seasoned economist, about as seasoned as you can get, right? So what do you think these folks that run these active ETFs are doing? These other folks that are hedge fund managers, they can be so erratic. Their opinions change like boom, boom, boom. And next thing you know, they're selling out of positions. They're buying positions. They're in, they're out. Oh my gosh, they're short, they're long. They're all over the place. Their opinions are all over the place. And it's like the market's not changing that fast. The dynamics in the economy are not changing that fast. The dynamics in company earnings are not changing that fast. So the fact that your opinion and you're so erratic up and down all the time, but you got to remember, these folks that are the fund managers that are running the ETFs, all these sorts of things, you got to understand they're dealing with a lot of stress. They're dealing with a lot of stress on their shoulders, right? And I would say the far majority of them don't know how to handle their stress. They don't. They haven't learned meditation. They haven't lived a stressful life. They might not have had a stressful enough childhood and those sorts of things. So they haven't been through it. But a lot of people are attracted to finance for the money because it's a lot of money, right? And who doesn't want to be rich? So these folks go down this path that they might not even be meant for. Not everybody's meant for this game. Not everybody's meant to run money. That's the thing you got to understand. Not everybody's meant to run a portfolio. Some people are. Some people can be very well trained and they can do that. And they're programmed to do that, right? Some people aren't. But they get into this because of a lot of money. So they don't even know how to handle stress. And when you don't know how to handle stress, right? Guess what? Your behavior is going to become very erratic. Additionally, with a lot of these individuals, we got to talk about substance abuse. Listen, there's a lot of substance abuse out there when it comes to folks that run money, okay? A lot of these folks, I'm just telling you guys, I'm just being honest. A lot of them have drinking problems. A lot of them have more than drinking problems. They do other stuff. This is something that's known out there on Wall Street. Ask anybody on Wall Street, they're going to tell you what, some of these people are on, okay? And so you got to understand, when you're dealing with a lot of people that have a lot of stress and potential substance abuse, you're going to deal with erratic behavior. These folks' emotions are going to be all over the place. One minute they're going to be out, next minute they're going to be in, next minute they're doing this, next minute they're doing that. They're moving all around. They're going a million miles an hour, right? And it is what it is. You just got to understand. So between these two, you're going to have a very bipolar market. Now, in regards to these humans, if they can't learn to handle their stress, you know what a substance they should do? They should go down the planet, get the fattest fatty from Jack Jackson. Whenever they're thinking about they're going to make this crazy move, I'm going all in the market, I'm going all out, I'm doing this, blah, blah, blah. They should just smoke the fattest fatty down there and just chill. Just chill, man. Relax a little bit, okay? By the way, speaking about the planet, this was this past Friday, late afternoon. Took a picture. Planet's getting busier and busier and busier. They're doing so phenomenal, starting to attract traffic there. wait to see the numbers for the remainder of this year and going into next year. And they got more coming in regards to build out of the Planet and new attractions they have there. Bob and Larry, they were talking on the conference call about they're attracting, I believe he said, over 100 or several hundred people a day just for the tattoo parlor that's in there, right? Which just brings a crazy amount of traffic. And they're just adding more and more things. They have the lounges in there now, the bar. Oh my gosh, like it's incredible. Now, in regards to the Planet, we're on the path back to 7. It has started, folks. 72% up very quickly here. The path to 7 has started. And for the first time in years, the fundamentals in regards to Planet are starting to get better. Now, in terms of this year, analysts have the company doing about 28% revenue growth. And then in terms of next year, analysts have the company doing about 40% revenue growth. I believe the number is too low for next year. I believe the company will do over $200 million of revenue. The Vegas location alone is going to put up ridiculous numbers in 2025. Additionally, Orange County continues to get stronger. They got the wholesale business coming there very strong. The Illinois store open for a full year. It's going to be massive for the company in 25. The Florida, they're going to have 30 plus stores open in 2025 and a full year of revenue recognition there. So I think they're going 200 plus next year, which is going to be huge. And keep in mind, in regards to Planet, the holding market cap of the company is around 200 million right now. So we're talking about, I believe they're going to do about 200 million in revenue next year for a $200 million market cap. And for a company that has this sort of growth rates, oh baby, are we talking, we're going back to 7, where it's going to be a process to get there, but it's going to be we're going to climb the mountain. No, 280E. Okay, so this is a very complicated subject. I should dive super in depth in the subject, but if I try to break it down as easy as possible, okay? Section 280E disallows all deductions or credits from any amount paid or incurred in carrying any trade or business that conducts something in regards to Schedule 1 or Schedule 2, okay? Now, in regards to Jack Jackson, that's been in that schedule, right? But recently, MJ is getting moved to Schedule 3, which means these companies, there's going to be a substantial, and I mean a substantial difference in the profitability for companies like the Planet or other companies that deal in the Jack Jackson space because of this 280E change. And so this is going to be something that could be a huge tailwind behind these companies for the next several years, just to be quite frank, which is amazing. It's a very nuanced subject. It's complicated, and also the timing's complicated because the IRS says the full change has to happen before you can do it. There's a whole situation going on, okay? It's a very complicated matter, but the moral of the story is things are all moving in the right direction here, and these tax changes are huge. Huge for this industry, huge for companies like the Planet. So my opinion is, for a company like the Planet, they're going from being in the hurricane for the last couple years to they're going to become the hurricane. In 2022, 2023, this company was in a horrible spot, right, leading into the beginning of this year. 2024, this year we're in, this is the even out year where we get things back on the right track, heading all in the right direction, revenue, margins, profitability, everything, right? And then I believe 2025 and beyond will be great for this company regardless of if unemployment goes to 5, 6, 7, 8%, whatever happens, that will be what that's going to be. But I think this company set up phenomenal. By the way, there's also potential, and we'll talk about the range of outcomes in this video. There's also potential the consumer could get a lot stronger over this next year. Real wages, we'll get into that. We'll dive into that in just a moment. I got some important stuff to show you in regards to that. Now, the Russell's starting to roll, and I'll say this move in regards to the Russell, this is the first time we've seen a real strong move from the Russell in a long time. This baby bottomed out around October, November last year. And since then, we got a real roll in regards to Russell. Before that, every spike in the Russell just got sold off. Finally, we have a Russell that is continuing the uptrend, right? Yeah, you could have downtrends for a few days, a few weeks, something like that. But at the end of the day, the trajectory is pretty crystal clear here. Now, I was reacting to a video on my reaction channel, Jeremy Lefebvre Makes Money, which, by the way, should hit 50,000 subscribers maybe the end of this month or so. So I appreciate you all that are subscribed over there. But I was reacting to a few videos in that one, right? And one of them, Liz Ann Saunders, I believe, she's over at Charles Schwab now. She was talking about small cap stocks. And she was talking about, okay, if you want to buy small cap stocks, don't buy trash, right? Because if you're looking at like the Russell 2000, there's plenty of trash in there. And she's talking about make sure you're getting companies that have great balance sheets, low debt, right, are cash heavier, good business models, improving margins, those sorts of things. And I'm right with her on that. But I don't think you should just do that in this market. I think you should do that in any market. Any market you're in, find the companies that have great balance sheets, great business models, have margins that can get better and better over time, right? And if I look at the companies that were doing tremendous for me today, my 3 best stocks today were Honest, 8% plus move, Revolve, 8% plus move, Elf's around a 7% mover today, right? Those would all get kind of put into the small cap category, even though Elf's kind of gotten a little bit out of the small cap, it still gets put in with those bunch of stocks, right? And guess what? All 3 of those companies' fundamentals are getting massively better. Massively. Look at their revenues. Look at the net income trends for these companies. They're changing in a substantial way. The Honest company, I mean, this stock's now up 206% in the past year. I don't see any stopping in sight. Obviously, like with all stocks, it's going to have bad days and bad weeks, right? But at the end of the day, like, I think the trajectory of Honest stock is higher and higher and higher for a while. And here's why. The fundamentals of the company. You've got to go back to the fundamentals of the company, right? And we're looking at a situation here where the fundamentals are getting better and better and better. They've now had 4 straight quarters under Carly's leadership, right, of earnings per share beats and revenue beats. 4 straight quarters. This is amazing what is going on there at Honest. And it reminds me a little bit of Lisa Su when she got hired back at AMD back in 2014. So she got hired at AMD back in 2014. And since that time, the stock's up 4,000+%. It's done absolutely tremendous. And if you can get the right CEO at a company, they can completely change their trajectory of that company over a 5-10 year span in such a substantial way. And remember, when Lisa Su joined AMD, it was a joke of a company, a complete joke of a company back in 2014-15, right? A lot of people thought the AMD could go bankrupt. Actually, it's very similar to Honest in terms of like people, you know, before Carly joined, a lot of people thought that company could go bankrupt, and it was for good reason, just like AMD was for good reason. So Lisa Su gets brought on 2014, 2015, her first full year on the job. She's changing a lot of stuff, and I mean the numbers were horrible, right? They did $3.9 billion of revenue that year, operating loss of $352 million for the company. Bad, right? And ever since that time, she's just improved the company year after year after year after year. Absolutely incredible. Look at how bad the balance sheet was when Lisa Su joined the company, right? This is why people thought there's a potential AMD was going to go bankrupt. The balance sheet was horrible and the income statement was horrible. I mean, operating loss of $352 million, and then I believe the net loss that year was like $600 million for the company that year. And then you had a $412 million negative shareholder equity. Horrible, right? Look at it now. $56 billion in shareholder equity as of the last report for AMD. What a change, right? She did that amazing. And so you got to keep in mind, certain CEOs are the perfect CEO for that company, and we might have one in regards to Honest. It's looking pretty dang good in regards to that one, right? Now, that leads us to Revolve. I grade income statements all the time inside the private group, and I post them teaching people how to read income statements. Look at this. The net income for the company over 2x'd on a year-over-year basis. We're not even in a strong consumer environment recently, right? It's not like this is some boom times for retail, some boom times for, the consumer. No, she's still in a bad spot. So imagine when revenue gets rolling in a major way again and the consumer gets strong. Because remember, Revolve's one of these companies that you kind of expect to grow like 20% plus a year unless you're going through a major consumer recession, which we've honestly kind of been in for the last year or two, right? So imagine where their bottom line is going to go when that revenue starts really rolling in again, which it will. And the consumer gets stronger, Revolve's going to be rolling in the money. Now, that leads us to real wages. Real wages, one of the most underappreciated things in the entire financial markets, in the entire stock market. Because you got to understand, real wages really dictate if the consumer is going to spend in future years or not. If real wages go down and down and down for a few years, that's going to very negatively affect the future spending in future years, okay? So we had a ridiculous drop in real wages here, okay? Real wages fell off a cliff from basically shortly after Rona into essentially the first half of 2022. It was ugly. Real wages, that's one of the biggest drops you'll ever see in the real wages. I mean, incredible drop, right? And certainly the biggest drop in modern times we had. And so real wages fall off a cliff, and that hurt us significantly starting in the second half of 2022 and led into the first half of this year. Now, if we take a peek here, this shows you, what I'm showing you here is I'm showing you prior to the great financial crisis, because I think this is very important. So if we go back to kind of like 02, 03, we had a big jump in real wages into kind of the end of the first half of 2004. Now that major jump in real wages got the consumer in a really good spot, and that helped set up a very strong economy 2004 through 2006. And anybody that was in the economy back then would tell you the economy was very strong back in 04, 05 into 2006. It was after 2006 things really started to get bad. And why was that? Well, look, then we had real wages drop off a cliff. Now there's lags in regards to the real wages. It's not like real wages go down and it affects everybody in a second and the whole economy is devastated. No, but if real wages go down over a 1-2 year span, that will mean the next 1 to 2 years after that are going to set up very poor, because the consumer is going to have gotten hit bad, right? And so just like there's Fed lags where it takes, the Fed, after they start raising rates, it takes a while to start to really affect the economy. Same way on the other way, right? When they start to lower rates, it takes a while to start positively affecting the economy. We're talking about a situation here with the Fed lags where that set up the great financial crisis, because from the second half of 2004 through the first half of 2006, because real wages dropped so much, that set up a bad consumer environment for 07, 08. That bad consumer environment caused a massive pullback in home buying, a massive pullback in, let's say folks buying cars, buying boats, doing anything in the economy, right? And guess what? We had? Great financial crisis. And that led to a whole bad situation. And so there's lags here. But if you're talking about a trend that goes down, 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 it's going to be really, really bad, right? And so now we could get in a situation where real wages come back very nicely over the next 1 to 2 years, right? If that happens, it's going to bode very good for the consumer. It's going to bode very well for the economy. It's something you have to consider. It's something that has to be considered, especially with GSG, the commodity index, not doing a thing. That's good. Now, this leads me to this subject that I got to talk about. A range of outcomes. I was taking playing poker serious for a little amount of time. And what I learned playing poker was it's a very complicated game. There's a range of outcomes that you've got to constantly be considering. You've got to constantly be considering these things. So for instance, right from the go when you get your cards, right, your 2 cards, right from there, you're already having to make a ton of decisions on if you're even going to stay in that hand. If you get a really bad something, right, it's easy to go out. Like if you get, a 6 and a 2, it's very easy to fold your hand, right? But what about if you get a 9-8? What if you get a suited pair? It's something like that, right? Then what do? Well, then it comes down to table positioning. Where are you positioned at the table? Are you playing against weak opponents or opponents that are very strong, right? That's going to matter in. Then it's going to come in, the cards are going to come, and do you raise? Do you not raise? Very complicated, but there's a range of outcomes that can happen throughout that hand, and you have to know kind of what to do and what to react in all those different situations. It's complicated, right? And so in the stock market, people get into trouble because they assume there's only one possibility. It's only this, and that's it. No, there's a range of possibilities. There's a range of potentials. And people get so fixated on only one thing happening. And that's where you screw up in this game. Everybody loves a guy, I guess. It's not, I don't love them because it's an uneducated view, but everybody loves a guy who just says, it's only this way. They go Michael Berry, full bear back in the day, right? Or it's a Tom Lee, he's a perma-bull, it's only to the moon. People fall in love with that. But that is a recipe for disaster in the financial markets. That's a recipe for failure over the long term in the stock market. As somebody that runs money, right? Your own money. You have to be able to look out there and say there's a range of outcomes here. There's a situation where unemployment could go up. We could have a recession. There's a situation where the consumer is finally getting in a better spot because they're not having to get sliced and diced by inflation for the first time in years, and that could lead to much better things. And suddenly the Fed starts dropping rates, so we could be in a situation where the consumer gets stronger. They're not having to deal with inflation hammering them. Then the Fed suddenly is lowering rates, so they're not getting as sliced and diced by the Fed as well, right? In interest rates when they go to borrow on a credit card or go to buy a car, or they could refinance their house. Let's say you bought a house in the last 2.5 years, right? At a very high mortgage rate. Well, if mortgage rates are coming down substantially, you could refinance and suddenly save yourself an extra $100 a month, $200, $400, $600. That's extra money in your pocket that you can go spend in the economy, which causes the consumer to do better. You can go buy a new dress at Revolve, right? You can go buy some honest products. You can go to the Wynn. You can go to Vegas, have a good old time. Boom. That's an outcome, right? There's another outcome where it's just like the consumer continues to weaken and jobs are lost. There's that. You also got to keep in mind how many jobs are available in the economy. Right now, there's still a significant amount of jobs available in this economy, right? We haven't reached that tipping point where you'd be like, oh man, if people lose jobs, this is really bad. We could get there over the next year or two, but we haven't reached there yet. There's still a massive amount. Last time I looked, which I believe was earlier today on the Reaction channel, I think we looked at job openings. I think we're still at 7 to 8. I think we're at like 8 million job openings still, right? It's a big number. Keep in mind the Great Financial Crisis. Prior to the Great Financial Crisis, we were at about 4 million, and we went to 3 million very quickly. We're at like 8 million. We've got a long way to go before you can say, oh man, if people lose their jobs, they're done. Not to that point yet, right? And so these are all things you got to factor in. There's a range of outcomes here, and if you're not factoring in the range of outcomes, and you only believe it's one way and one way only, you're lost in this game. You're going to get screwed, and you're going to produce yourself worse returns. You have to take it the full range of outcomes in there, right? Which is why I remain invested in the market. I always keep cash around because I'm understanding of this range of outcomes, right? I'll have some hedges on. I'm going to put some new hedges on in the fourth quarter of this year, like I do every year for the next year, right? And boom, we'll roll. GVD, growth value dividends. If my growth stocks don't do well next year, my dividend payers are still going to be paying me all those dividends, right? Next year could set up for a very good year for value stocks, regardless of what happens out there. So in a lot of these consumer names that have been hammered, they could have very strong, 2025s, right? These are all things you got to factor in. There's a range of potentials, there's a range of outcomes. If you're not factoring it all in this game, guys, there's a range of outcomes in the stock market. If you don't factor those things in, you're lost in this game. And don't be so hell-bent on it's only one way. Position yourself where you win all around. If the market goes down, I'm not scared. I got money. I got money on the side, ready to roll, right? If the market goes up, I'm going to make a fortune. If the market doesn't do anything, cool, my dividend stocks are going to keep paying me out money. That meta sweet dividend is going to keep pouring in, right? Like, position yourself to win in any market, guys. All right. Appreciate y'all joining me as always. If you're looking to apply, join a private group, take your game up to a much higher level, get access to my course curriculums. I teach you everything you want to know in those course curriculums. Click the pinned comment down there today, fill out an application. We'll see if we can get you in there maybe next week. Access to 1000xstocks.com as well, which is just, oh man, that's the number one out there now. We're doing special things with 1000x. It is the most well-rounded software that exists for long-term investors out there. What we're creating there is just unbelievable. All right, guys, much love as always, and have a great day.